How is everyone doing? Welcome back to another episode of the Banker Next Door. I am your host, Dr. Joe Berquist. This is the weekly banking update where you give me 30 minutes of your time and I try to give you all the current banking news that's going on around the world out there right now. So first, I just want to start a little shout out. Got my show a little Phillies pride here. My Philadelphia Phillies are in first place in baseball right now going into the All-Star break, and just wanted to give my Phillies a little love there. It's a little shout out to them. And plus, it's very hot here in Philadelphia right now, so I didn't feel like, putting on the dress clothes or whatever for today. But anyway, all right, let's get into some news here. So what are some economic indicators for stuff that's coming up this week? So on Monday, we have the New York Empire State Manufacturing Index. Fed Chair Jeremy Powell will speak at noon. On Tuesday, the 16th, we get core retail sales, and then we get overall retail sales, and then we get the API weekly crude oil stock. On Wednesday, the 17th, we get building permits, housing starts, and we get the beige book at 2 p.m. On Thursday, we get initial jobless claims, the Philadelphia Fed Manufacturing Index, and U.S. Leading Index. And we get FOMC member Michelle Mickey Bowman is going to speak at 7:30. And then on Friday, we get the U.S. Baker Hughes oil rig count. So a little bit lighter on the economic news this week, but still some good things coming out. We got some Fed information. We got some retail sales and some manufacturing info. So good stuff coming up this week. So let's get into some of the current news and things that are going on. So JP Morgan, Citigroup, and Wells Fargo all reported their quarterly earnings this week. I don't think any big shockers. JP Morgan had net income of $18 billion or $6.12 per share, which was up from last year. Citigroup reported $3.22 billion or $1.58 per share, which was also up from the second quarter of 2023. Wells Fargo reported net income of $4.91 billion or $1.33 a share in the second quarter, and that was down just a hair from where they were in the year ago quarter. So some other news. JP Morgan, the biggest U.S. bank by assets, aims to bite 15% of the country's consumer deposits and 20% of credit card expenses in the U.S., Reuters reported, citing an interview with Marianne Lake, JP Morgan CEO of Consumer and Community Banking and named potential successor to CEO Jamie Dimon. JP Morgan accounted for 11.3% of U.S. retail deposits as of the end of June of 2023, based on the latest available data, and currently 17% of the nation's total credit card spending, according to the report. Now, here's an interesting thing here with that. So there was a law for a long time that basically said that no bank in the United States could have more than 10% of the deposit market share in the country. I don't know if that is still in effect or if that is still a thing. I'm going to research that. But even if it isn't, I think the question becomes, do we want JP Morgan to have 15% of all the deposits in the country? I mean, that seems like an awful lot of deposits concentrated with one bank. And I don't know that that's necessarily a good thing. And I think a conversation probably needs to begin to be had about how big do we allow JP Morgan to grow. So it's, again, just a side note, still thing to think about. So Citigroup Inc. granted, if I say this gentleman's name right, Viswas Raghavan, I think it's Raghavan, the bank's newly hired head of combined investment, corporate, and commercial bank, more than $40 million worth of company shares, which is enormous, even by Wall Street standards, the Financial Times reported. Now, my thought is that they're giving this gentleman this money because he is probably the heir apparent. I think I wouldn't say their current CEO has been doing a bang up job, and I wouldn't be surprised if she gets, pushed aside and this gentleman probably gets the reins, and they're probably giving him this money as an initial enticement to keep him around. That's just a thought or an observation. The actions by the Federal Reserve Board and the Office of the Controller of the Currency against Citigroup is a negative indictment of management. JP Morgan analyst Vivek Juneja said the regulators fined Citigroup about $135 million over alleged violations of the October 2020 enforcement actions that alleged deficiencies in the company's enterprise risk management, compliance risk management, and data governance and internal controls. As to what I was just saying about the current CEO heading out the door, because a lot of this stuff has been happening on her watch the last few years, and not going super hot. Private equity firm Bain Capital agreed to acquire Envestnet in a take-private transaction valuing the financial technology company at $4.5 billion. Reverence Capital will participate in the transaction. BlackRock, Fidelity Investments, Franklin Resources, and State Street Global Advisors committed to invest in the deal and will hold minority positions in the private company upon the transaction's closing likely in the fourth quarter. The Seventh Circuit U.S. Court of Appeals reversed a long court ruling and decided that the U.S. Consumer Financial Protection Bureau can police redlining and revive the agency's first such case against a non-bank mortgage lender, Reuters reported. The CFPB may now try to prove that the Chicago-based Townstone Financial Inc. and its co-founder Barry Sterner violated the Federal Equal Credit Opportunity Act by discouraging blacks from applying for mortgage loans, the report said. U.S. House of Representatives failed to overturn President Joe Biden's veto of a resolution nullifying the U.S. SEC's guidance curtailing banks from offering crypto custody assets. American Banker reported the House, which needed a two-thirds majority, voted 228 to 128, according to the report. And then this is very interesting. Non-bank mortgage companies accounted for over two-thirds, or 68.8% of first lien 1 to 4 family site build owner-occupied home purchase loans in 2023, up from 60.2% in 2022, the Federal Finance Institutions Examination Council, or the FFIEC, disclosed in a press release. Now, this is very basically like where banks are at right now. I would say you literally have two-thirds of non-bank entities are originating mortgages or mortgage loans today. And this is all mainly due to regulation. The regulations that have come out since the financial crisis back in 2007 and 2008 have basically forced a lot of banks to throw up their hands and basically say, you know what, the regulations are just so cumbersome and so expensive that we're just not even going to play here. We're going to go somewhere else. And thus a lot of, your Rocket Mortgages, a lot of these different non-bank mortgage companies have been able to take over a very large pie of the mortgage business. So just very, like I said, just a very interesting thing to point out. So, okay, continuing on, the Federal Reserve Board and the Office of the Comptroller of the Currency fined Citigroup, more great Citigroup news, $135.6 million over alleged violations. Oh wait, we already hit that, so let's continue on. The Consumer Financial Protection Bureau's actions against Fifth Third Bancorp over alleged wrongful repossession of customers' cars and opening of fake accounts resolve concerns, analysts said. While it may create a near-term drag on the stock, our best guess is that the CFPB's proposed order will help close the book on this issue, Piper Sandler analyst R. Scott Seifers wrote in a note. Democratic lawmakers, including Senator Elizabeth Warren, wrote J.P. Morgan Chase & Company CEO Jamie Dimon a letter criticizing the bank for backsliding a nearly 2 decades of climate and environmental commitments and raising concerns over whether the bank has been misleading investors and the public. Cry some more. Yeah, that's all I got to say about that. U.S. regional banks are expected to build loan loss reserves and go easy on stock buybacks in the quarters ahead as they face earnings pressure from losses in commercial real estate portfolios, Reuters reported, citing analysts. I will have more news on that if you hang out for just a few more minutes. I'm going to share some articles here, and I'll have more with that. So a New York federal jury found Archegos Capital founder Bill Wan guilty of 10 out of 11 counts related to running a criminal conspiracy and committing securities and wire fraud that allowed him to amass a multi-billion-dollar fortune before his firm collapsed in March of 2021, the Wall Street Journal reported. Federal prosecutors had accused Wang of defrauding banks to borrow billions of dollars as part of an effort to manipulate prices of media and tech stocks and Archegos' portfolio, the report stated. Intuit is laying off roughly 1,800 employees and closing sites in Boise, Idaho, and Edmonton, Alberta, Canada, as part of a reorganization plan. The company will hire almost the same number of employees in fiscal 2025, with expectations for its overall headcount to grow in that fiscal year and beyond. Okay, the Fed is considering updating inputs it uses in the calculation of an extra layer of capital and imposes on U.S. global systemically important banks, or GSIBs. Known as the GSIB surcharge, which was introduced in 2015, Reuters reported, citing 4 people with knowledge of the matter. The central bank plans to update the inputs to adjust for economic growth and accurately reflect the size of the banks relative to the global economy, a move that will bring down bank systemic scores and resulting capital surcharge. The unnamed sources told the news outlet. Discussions are ongoing and no decisions have been made yet, Reuters reported. Federal Deposit Insurance Corp board member Jonathan McKernan urged regulators to issue clear guidance on third-party risks to enable innovation and competition in the financial services sector, American Banker reported. McKernan also seconded a statement made by CFP Director Rohit Chopra, calling upon agencies to lower the barriers for companies entering the bank fintech space. I don't know. There's just so much going on there. I mean, with the Synapse bankruptcy, a lot, regulators wanting to have banks really have, watch these partnerships and vendors that they have there. They've put out a lot of guidance about this recently. So, yeah, I think there's a lot, it's like this, you're trying to balance the scale. And on the one hand, it's like, oh, we got to dramatically increase our oversight of all these partners, but then on the other hand, it's like, oh well, we got to lay off and we got to make it easier for more fintechs to come in and do this and that. I mean, you can't have it both ways. So we'll see how all that continues to unfold and evolve. So Fed Chair Jeremy Powell told the House Financial Services Committee that while it is ready to go forward with a new capital proposal for banks, it does not have supremacy over the FDIC and the OCC on regulatory matters, and it will not try to pressure them on revisions to their joint Basel III endgame proposal, American Banker reported. I will have more news on this in just a second. Like I said, more articles coming. Okay, this is interesting. So the criminals involved in Memphis, Tennessee-based Evolve Banks and Trusts previously disclosed cybersecurity incident downloaded information from the bank's database and a file share that included names, social security numbers, bank account numbers, and contact information for most of its personal banking customers and customers of its open banking partners. The bank has learned that personal information related to its employees was also likely affected, it said in a press release. So it's very interesting development there. FTX Trading Ltd founder Sam Bankman-Fried's father and younger brother could be closely involved with his political donation binge at the collapsed cryptocurrency exchange, the Wall Street Journal reported, citing previously unreported emails. And the answer to that is yes. Yes, they are both closely tied to their political donation binge. And those charges, unfortunately, were dropped as part of the prosecution against him, but I don't know. Maybe they'll be revived against the brother and the dad. I don't know. We'll have to see there. And then let's see what else we got. I thought there was one other thing I wanted to. All right. Anyway, all right. So enough of that. Let's get into. Okay, let's get into some other news here real quick, and then I want to share these articles with you guys. So, Fed to Congress, no rate cut until inflation comes down. The Federal Reserve does not plan to reduce targeted interest rates until inflation comes down more, according to its latest monetary policy report to Congress. We did get some inflation numbers this week. The CPI and the PPI both were up, while the PCE was nudged down a little bit. Again, I don't think that that's enough necessarily for the Fed to decrease rates. The CPI and the PPI have now been up, although slightly. They have been up for each of the last 3 months, and the revisions are not looking great either. So I don't know that this gives the Fed enough ammunition to cut rates. However, I do think the Fed will cut rates, and I do think that the first one will come at the September meeting after this summer. So, but like I said, we'll see what goes on there. FinCEN updates beneficial ownership information. I've been talking a lot about beneficial ownership information. If you haven't seen my episode on that, go back and check that out. I will be doing another update with a little bit more information on the BOI front. I'll be putting that together probably this week. The Corporate Transparency Act requires most U.S. corporate entities to report to FinCEN information about the beneficial owners, those who ultimately own or control the company. FinCEN has issued 4 final rules implementing the CTA, which specify who must file a report of beneficial ownership. That information must be provided and when a report is due. But ICB has repeatedly called on FinCEN to withdraw beneficial ownership requirements for banks, not for the owners of these companies, but for banks. Now, that is required to collect this information directly from reporting companies. Okay, so like I said, I will have more information on that. So consumer credit rises in May. Consumer credit increased 2.7% in May after increasing 1.5% in April, the Federal Reserve reported. Revolving credit, which includes credit card spending, increased at an annual rate of 6.3%. Non-revolving credit, such as auto and student loans, increased only 1.4%. FDIC nominee: community banks are the lifeblood of many communities. The Biden administration's nominee for the FDIC chair, Christy Goldsmith Romero, told Congress she gained a great appreciation for community banks during her time at the Office of the Special Inspector General for the Troubled Asset Relief Program. Testifying at a Senate banking nomination hearing, Goldsmith Romero said community banks play an important role in the nation's economy and are the lifeblood of many communities across the country. Goldsmith Romero said that if confirmed, she would prioritize a complete overhaul of the FDIC's workplace culture after an independent review found the agency had failed to provide a workplace safe from misconduct. The FHFA releases Vantage Score 4.0 credit scores. The Federal Housing Finance Agency announced that Fannie Mae and Freddie Mac are making historical Vantage Score 4.0 credit scores available to approved users to support the transition to updated credit score and credit report requirements. This is big. ICBA and other groups in May pushed back against the FHFA plan to publish historical data on the Vantage Score 4.0 credit scoring model. In a joint letter last year, ICBA and other groups called on the FHFA to release the results of its testing process that validated the new credit score models. In a previous letter, the groups expressed concerns with the FHFA plan, said the agency's plan fails to address the far-reaching effects of the change, and called for expanded stakeholder engagement and transparency. So basically, what's happening here is you have the 3 credit reporting agencies, and they use the FICO score. But now the FHFA, they want to change that, and they want to use this Vantage Score 4.0. And the concern is that this Vantage Score 4.0 has never been used. It's never been used by anybody, and so it has it. And they say the FHFA says that they validated this. But it's like, okay, well, if you validated it, then what's your historical data? Let's see it. Let's see what you got, and then if you could prove it, then that's cool. But if not, then why are we doing this until we have more information? So like I said, but that will have a big effect on residential mortgage loans. So we'll keep an eye on that. Input on FHLA bank system mission review is due Monday. So Monday is the deadline for community bankers and others to submit comments on the Federal Housing Finance Agency's request for input on the mission of the federal home loan banking system. That will be a very big thing because obviously the Federal Housing Finance Agency, I believe, wants to make dramatic changes to the federal home loan bank system, which I am not for. I think they should leave the federal home loan banking system alone. The federal home loan banking system is critical to thousands of community banks around the country, and it just leave it be. FATF, most are unprepared for virtual asset risk. So policymakers worldwide are struggling to respond to virtual assets risk, according to a report from the Financial Action Task Force. They found that 75% of jurisdictions are partially compliant or non-compliant with FATF standards. 29% have not completed any virtual asset risk assessments, and 27% have not decided if or how to regulate virtual assets. So interesting. IRS warns of email scams in light of recent ransomware attacks aimed at car dealers. The Internal Revenue Service warned taxpayers, businesses, car dealers, and tax professionals to be vigilant against evolving phishing and smishing scams. Agencies released the 2023 HMDA data. The Federal Finance Institutions Examination Council released the 2023 Home Mortgage Disclosure Act data for 5,113 U.S. financial institutions. So there's some interesting there. Among the 10 million reported home loan applicants, 7.7 million were closed end, 2.1 million were open end, and 260,000 were not reported either way due to the S2155 regulatory relief laws partial exemption. So more information there. Consumer prices dipped slightly in June. Megabank Group urges IG to investigate community bank assessment exemption. So the Policy Bank Institute called on the FDIC Office of the Inspector General to investigate the FDIC's recent special assessment, which exempted the vast majority of community banks. So it'll be interesting to see if that goes anywhere. Let's see here. Fed pals, regulation shouldn't drive community bank consolidation. So Federal Reserve Chairman Jeremy Powell told Congress that the high cost of regulation should not contribute to community bank consolidation. That's so nice to him. Unfortunately, yes, Jeremy, the high cost of regulation is contributing majorly to bank consolidation and has been for the last 20 years, in case you hadn't been paying attention. CFPB proposes mortgage servicing rule. The Consumer Financial Protection Bureau issued a proposed rule to amend mortgage servicing rules under Regulation X. The OCC targets September for a final rule on bank mergers. The OCC said September is its target date for finalizing its proposed policy statement on bank merger transactions, according to the Biden administration's recently published agenda of regulatory actions. Wholesale inventories rose in May. Mortgage applications dropped over the last week. CFPB says it will consider eliminating credit card fee, the safe harbor. And then I think, small business optimism reaches highest level of the year. That's good. And then the CSBS, the Community Bank Economic Outlook, remains below neutral. The Conference of State Bank Supervisors said community banks are slightly more optimistic about future economic conditions, but not enough to move the needle above neutral. Okay. All right. So now let's go to some articles real quick before we wrap up here. So, and I've got a number of articles here, but I'm going to try to get through them relatively quickly here. So risk appetite in U.S. stock market tumbles to the lowest level in 9 months. So U.S. investors are growing increasingly risk averse as they view the recent stock market highs as unsustainable, according to the latest results from S&P Global's Investment Manager Index survey. So just something interesting to note. Markets look for revenue turnaround and credit blips in big U.S. bank earnings. So investors are on alert for bank earnings reports that diminish expectations for a bounce in net interest income or signal an unraveling in credit beyond the relatively benign deterioration so far, analysts said. So consensus forecasts anticipate sequential increases in earnings per share for the second quarter for 9 of the 15 largest U.S. banks, according to data from S&P Global Market Intelligence, with analysts having already penciled in net interest income bottoms for some. By contrast, consensus forecast anticipates year-over-year EPS increases at only 3, with net interest margins under pressure across 2023 and credit costs rising. Tension remains on how much of an inflection in net interest income might emerge. So, but like I said, we already had the earnings for Citibank, Wells Fargo, and JP Morgan. And, JP Morgan and Citibank seemed to be fine. Wells Fargo was basically not break even, but they were at, maintain par with where they were. So nothing really catastrophic there, but public U.S. banks with high CRE concentration are under SEC scrutiny. So banks must be prepared to provide federal regulators with increased disclosures on their commercial real estate portfolios, including to an unlikely entrant. So the U.S. SEC is increasingly probing public U.S. banks with high commercial real estate concentrations, while the 3 main federal bank regulators are also more closely scrutinizing bank CRE books to look for safety and soundness concerns. The SEC, too, has joined in asking banks for more information on industry and geographic breakdowns, average loan-to-value ratios, ranges of loan-to-value ratios, occupancy percentages, loan modifications, frequency, and sources of appraisals and risk management, industry advisors said. So interesting there. Keep an eye on that. Tepid lending, flat deposits to weigh on U.S. banks' Q2 2024 results. So persistently sluggish lending is likely to be a drag on U.S. banks' revenue when the sector reports financial results for the second quarter, despite funding cost pressure subsiding. As underlying short-term interest rates remain stable for more than 3 quarters, weekly Federal Reserve data showed that deposits were flat during the second quarter. Meanwhile, seasonally adjusted loans across domestically chartered U.S. banks increased 0.5% from March 27 through June 26, according to the Fed data, and were up 1% without seasonal adjustments. Credit card lending, which is highly concentrated among a relatively small group of banks, but has been an engine of industry-wide loan growth after a slump during the pandemic, downshifted in the second quarter, with bank executives observing a slowdown in consumer spending. So again, we're looking at, for the majority of banks out there, sluggish lending and not basically flat deposit growth with interest rates remaining elevated. So banks' cost of funding hasn't necessarily gone up, but it's certainly high relative to where they were over the last few years. So keeping it. So Street eager for credit quality, net interest margin clarity in U.S. regional banks' second quarter earnings. So all eyes will be on credit quality and net interest income and margin trends as U.S. regional banks report second quarter earnings coming up this week. Credit quality is expected to worsen in the quarter as metrics continue to move toward normalization from the pristine levels seen since 2020. Conversely, net interest margin and net interest income trends are expected to be a bright spot as the Street anticipates both metrics will trough this quarter. Investors will be watching for signs that the much-awaited bottoming and net interest income is in hand, challenged by weak loan demand, while credit quality remains well behaved. So we shall see. S&P 500 earnings jumped in the first quarter 2024. U.S.-Canada powered generation capacity grows. So first quarter S&P 500 earnings rose nearly 26% as the majority of indexes constituent sectors posted growth. You can see year-over-year change in earnings per share across the, energy did good, S&P 500, real estate, materials, consumer staples, financial, information technology, healthcare. What didn't do so hot is consumer discretionary, utilities, communication services, and industrials. So U.S. banks dividend hikes lessen sting from stress test results. So the big banks plowed ahead with dividend increases and a handful of share buyback announcements, despite downside surprises from this year's stress test that will lead to higher capital requirements. So keeping an eye on that. So I guess they figure that, they'll do a little bit of increase to the dividends, do a little bit of share buyback, and that will help them, kind of solidify their capitals and get people out there, hopefully buying that stock. Okay, here's a big one. Prime age labor force participation rate rises, defying market softness. And what I want to go to here is at the very bottom. So here's a chart. Here's a chart here, very important chart. Foreign-born workers are a growing share of U.S. labor market. Yes, they're finally, the mainstream is finally beginning to pick up on the narrative that I've been saying now for a number of months. And that is, when you break down the labor market reports, when you break down the jobs reports, what you're seeing is that all the new jobs are going to foreign-born workers, meaning illegal immigrants. And those jobs are coming in, and the growth in most of the jobs, though, is also in part-time jobs. And it's also government jobs coming from government funding. You take that out, where are we at? And then it even says right here in the bottom, the rise in the participation rate for prime age workers could be due. No, absolutely is due to the ongoing rise in immigration into the U.S. The percentage of foreign-born workers in the U.S. labor force was about 19.1% in June, up from 16.2% in June of 2020. It is likely that most economic migrants are in the 25 to 55 age group. Far fewer are in the 55 and over group, and many foreign immigrants in the under 25s are likely to be students. I don't know about that. But anyway, very important. I wanted to say, I thought that was important because for anyone out there that might be watching this, suggesting or thinking that I was not being straightforward with you, or I was imagining things or just kind of making things up. about the labor report. No, everything that I said is true, and it will be further proven true in the coming weeks and months as more of this data continues to come in. And then finally, just kind of wrapping up here, slowing U.S. inflation boosts chance of 3 Fed rate cuts in 2024. We'll see. FDIC chair nominee open to Basel III re-proposal. A potential new federal deposit insurance coped is open to re-proposal of the endgame rules. And then the last thing, Fed pushes for new Basel III proposal, negotiating with other agencies. Now, my final thought before we wrap up here is that I don't think with the election year coming in, I don't think they're going to come to a consensus on this Basel III endgame until perhaps after the election. Perhaps, if Trump wins, I think you're going to see a very different outcome here as opposed to if Biden wins. I think that a lot of these guys meaning the federal regulators here, are going to sit tight until they see kind of what happens. So anyway, okay, to wrap up here, basically, I had some great episodes that came out over the last week on, let's see here, what did we have out here? We had the Fed Now is turning 1 year old. What is going on with that? So if you want some information on the Fed Now service, go check that out. I did what I thought was a really good episode on why are banks dumping their insurance units. So go check that out. Why the SCOTUS ruling on Chevron, was that a good or a bad ruling for banks? I thought that definitely made for a very interesting conversation. So those were some of the episodes from last week. I just posted earlier today, I posted what is happening with pharmacies, which was kind of a look at what's going on with Walgreens, CVS, and Rite Aid. And I also did an incredibly troubling story. 40 banks disappeared in China last week. Absolutely crazy. Definitely check. I would definitely say check out that episode. But I will have more episodes coming out this week during the week, so make sure to check out for that. More episodes coming next weekend. I've got the whole kind of 1 year anniversary to plan for in August, so a lot of stuff coming up. A lot of good interviews. I got a number of good interviews that'll be coming over the next 2-3 weeks, so keep an eye out for those as well. I hope everyone enjoys the rest of the weekend, and I will see everybody again real soon. Please make sure to like, share, and subscribe, as that always helps the channel. Please make sure to remember we are on YouTube, Rumble, and all major podcast platforms. Leave your comments down below, and I will see everybody again real soon. Have a wonderful week out there, everybody.